Hello, my dear friends, ninza.cold family. I'm truly glad to see you all here today for our webinar. I hope your trading journey is going well, and more importantly, that you continue to stay confident in the path you've chosen. It is a great honor for me to have your trust and support through your participation in this session. As a token of our appreciation, we have prepared a special gift for those who stay with us until the end of the webinar, and I'm sure you're going to love it. In today's webinar, we'll be answering all questions related to the mechanism and detailed usage of our most talked about tool at the moment, ATR-TradeShield. Additionally, the second part of our session will introduce a trading strategy with a highly attractive risk-reward ratio, the super high reward strategy. Let's take a look at some real trading scenarios, ones I believe many of you have experienced. For example, you place a buy order and the price starts moving in your favor. However, due to fear or uncertainty, you adjust your stop loss impulsively without a clear plan or rationale. As a result, the price pulls back just enough to trigger your stop loss, then continues moving in the original direction. You miss out on a trade that could have ended in profit. NANI? Sounds familiar, doesn't it? Here's another common situation. You've already entered a trade, but you're unsure where to place your stop loss. You keep adjusting it emotionally without a solid rationale. At that point, you're likely feeling anxious and tense, constantly worrying that your position might be stopped out prematurely, right? Oh no! And I believe that's exactly how many of you have felt. And there's another situation many traders face: the hassle of setting up a stop-loss trailing strategy based on a specific plot or indicator.
A few moments later.
You have to manually attach your stop-loss orders to different trailing stop lines each time. That means if you place 100 trades, you'll have to repeat that process 100 times, time-consuming and prone to errors.
A few moments later.
If you only have one stop order, things are still manageable. But when you're managing multiple stop orders simultaneously, the number of manual steps increases significantly, and those actions become repetitive. It leaves you with little to no time to focus on other important aspects of your trading process. Even a single mistake or a missed step can lead to errors in your trading process. And then you'll have to spend extra time fixing the issue. And those challenges are just a part of what traders face in managing their trades. Understanding this, we developed ATR-TradeShield, a tool designed to help traders refine their strategies and introduce a new approach to risk management. More automation, more simplicity, fewer manual steps, faster execution, and most importantly, greater efficiency. Now, let's move into the first part. Why can we trust and use the ATR indicator to determine stop loss and target levels? Let's take a closer look at the relationship between ATR and price action to gain a deeper understanding. In the current example, the market is in a downtrend, and the ATR is rising sharply. This indicates that volatility is increasing significantly. In other words, when ATR increases while price is falling, it reflects stronger and more aggressive selling pressure. Next, we observe a temporary price rebound, but ATR starts to decline. This suggests that the upward move comes with low volatility. In other words, it's a weak pullback, lacking real momentum. Soon after, the price resumes its downward movement and the ATR rises again, indicating that selling pressure remains strong. Average volatility continues to increase in the direction of the downtrend, confirming the bearish market condition. Why is ATR a reliable tool for setting stop loss and target levels? Because ATR reflects actual price volatility. Price constantly moves up and down. And ATR shows the average range of that movement over a given period. This allows you to set your stop loss and target levels in line with real market context, rather than using arbitrary fixed distances that ignore price behavior. Because ATR is a dynamic and objective indicator. Markets are always changing, and ATR updates continuously based on the latest volatility. Unlike fixed levels, ATR helps you adapt to the current market environment, avoiding emotional or random decisions. ATR quantifies how far price is likely to move, which directly aligns with the core purpose of stop loss and target, to manage risk and lock in profits effectively. Up next, we'll walk you through the key features of ATR-TradeShield, the elements that set it apart and deliver real value. Right on your chart, you'll find a clean and convenient control panel designed for ease of use. With just a double click on the outer vertical axis, you can quickly toggle the panel on or off, allowing you to maximize screen space when it's not needed. Additionally, the panel is fully movable, so you can position it anywhere on the chart for maximum flexibility during your trading workflow. Info button, instantly toggle ATR-based stop target levels. Within the control panel on your chart, the info button acts as a visual toggle, allowing you to show or hide all stop and target levels calculated based on the ATR indicator. With a single click, you can display ATR-based levels, e.g. 3 ATR, 4 ATR, 5 ATR, to quickly evaluate your risk exposure and profit potential in the current market context. Hide the levels when they're not needed, keeping your chart clean and focused for clearer decision-making. So where do those ATR levels come from? The ATR levels shown on the chart are the preset values you've configured in the parameters section of the tool. For example, if level 1 stop multiplier is set to 3, that means your first stop level will be calculated as 3 times the current ATR. This ensures all calculations are transparent, systematic, and aligned with the specific strategy you're applying. Similarly, the second and third stop levels are calculated based on the level 2 and level 3 values you've set in the parameter section. For example, if level 2 is set to 4 and level 3 to 5, the system will automatically display corresponding stop levels at 4 ATR and 5 ATR, allowing you to easily monitor and select the appropriate stop level based on current market conditions. Similarly to stop levels, the target levels displayed on the chart, 4, 5, and 6 ATR, are based on the values you've configured in the parameters section. In other words, if you've set target level 1 to 4, level 2 to 5, and level 3 to 6, the tool will automatically plot those corresponding take profit levels on the chart, making it easier for you to monitor, compare, and select the most suitable profit target for your strategy. So, how are the ATR levels calculated? We'll now walk you through how the ATR-TradeShield tool calculates the stop target levels for you. First, let's take a look at the current ATR, which is 3.6, and the entry price for our sell order, which is 21,345.75. We can then use the following general formula. Assuming you set up a sell order and want the target to be 4 ATR, here's how to calculate it. Formula: target or your entry price minus ATR multiplied by the number of ATRs. Calculation: target 21,345.75 minus 3.6 multiplied by 4, 21,331.35. So your target will be 21,331.35 when using 4 ATR. However, for NQ, the tick size is 0.25, so it will be rounded up to 21,331.50. As you can see, when comparing the data, the ATR levels are calculated accurately, following the formula provided. Similarly, for a buy order, the calculation is done in reverse, meaning the target will be determined by adding the ATR to the entry price, allowing you to set a precise take-profit level. Additionally, we use advanced algorithms to help traders determine ATR levels based on different modes. One of these modes is the on-bar close mode, which allows traders to calculate stop target levels based on the closing price of the bar just before entering the trade. This mode helps you calculate stop target levels more accurately when there is a market shift right before you enter the trade. With the on each tick mode, the tool calculates the ATR based on the current price position, meaning that with every new tick, the stop target levels are adjusted instantly, allowing you to track market movements in real time. This mode is ideal when you need to calculate and adjust continuously with every small price movement. Before we move on to the next section, we'd like to emphasize one extremely important aspect of the ATR-TradeShield tool, which is to always focus on the ATM section whenever you enter a trade. You should never leave the ATM strategy as none whenever entering a trade, and here's why. This is because ATR-TradeShield is a tool designed to interact and modify the stop-ATR target levels you set initially based on the ATR levels you've previously defined. In other words, this tool cannot generate stop target levels by itself. If you haven't set any stop target levels before entering the trade, the tool will have nothing to adjust. Therefore, if the ATM is set to none, the tool will not be able to calculate or modify the stop target levels automatically, eliminating the benefits of using ATR-TradeShield. So, you need to set up your stop target levels in advance. For example, if you're placing two contracts with separate stop target positions, you need to set up the ATM first. Once you enter the trade, the new stop target levels will appear. At this point, ATR-TradeShield will recognize these stop target levels and automatically adjust them to the ATR levels you've set beforehand. This is how the tool helps you manage risk and optimize stop loss and take profit levels effectively. Similarly, if you enter a trade with 3 contracts and have an additional stop target level, the tool will recognize 3 different stop target levels for adjustment. This allows you to set up to 3 stop-ATR target levels per trade, giving you the flexibility to place multiple stop-ATR target levels according to your trading strategy. However, there are some important notes. You should not overtrade or continuously use the DCA dollar cost averaging method. If you do, the tool will struggle to adjust the stop levels as you wish. If too many stop levels are triggered, the tool will have difficulty accurately identifying and adjusting them effectively. Next, let's look at the stop and target button. First, if the stop and target button is set to inactive mode when you enter a trade, it means the tool will not automatically anchor your stop target orders to the ATR levels you've previously set. In this mode, you have the full freedom to manually adjust your stop and target levels as you see fit, without being bound by the predefined ATR levels. This can be particularly useful when you want more flexibility to adjust your stop or target levels based on your trading strategy, or when you don't want the tool to interfere with your decisions regarding risk management and profit expectations. During price movement, if you wish to move your stop to the ATR levels, simply click the stop button. Once you perform this action, the tool will automatically set all 3 of your stop orders to the predefined ATR stop levels. This allows you to easily adjust your stop loss levels according to the ATR values you've configured without the need for manual intervention. If you later decide that you no longer want the stop to be anchored to the ATR stop levels, simply click the stop button again to disable this mode. After doing so, your stop levels will no longer be automatically adjusted to the ATR stop levels, and you will regain full control over adjusting your stop levels as you see fit. Similarly to the stop levels, if you want your target levels to be anchored to the ATR target levels, simply click the target button. This will automatically set your target levels to the ATR target levels you've predefined. If you later wish to move the target levels freely and no longer want them anchored to the ATR target levels, simply turn off the target button to disable this mode. When the target button is off, you will have full control to adjust your target levels as you wish without the tool automatically modifying them. Conversely, when you enter a trade and the stop target buttons are set to active from the start, your stop and target orders will be immediately anchored to the ATR levels you've predefined. In this mode, the tool will automatically set the stop target levels to the ATR levels you have configured, and no further action is required from your side. Note that when both stop and target buttons are active and the stop target levels are anchored to the ATR levels, you will not be able to move them to a different position. If you try to drag them elsewhere, they will automatically return to their predefined ATR positions. Next, let's explore the merge and split features for stop-year target orders. This feature allows you to manage your stop-year target orders more flexibly, especially when dealing with multiple contracts or different stop target levels in the same trade. Before diving into the details of the merge and split features for stop-year target orders, please focus on the numbers 1, 2, and 3 on the control panel. Box 1 represents the stop level based on ATR level 1. Box 2 represents the stop level based on ATR level 2. Box 3 represents the stop level based on ATR level 3. Similarly to the stop levels, Box 1 represents the target level based on ATR level 1. Box 2 represents the target level based on ATR level 2. Box 3 represents the target level based on ATR level 3. At this point, if you don't want your stop orders to be spread across 3 levels and prefer to have all your stop orders consolidated at level 1, simply click on Box 1. When you click on Box 1, all your stop orders will be merged at level 1. Similarly, when you click on Box 2, all stop orders will be anchored to level 2, and when you click on Box 3, all stop orders will be set to ATR level 3. This way, you can easily adjust and consolidate your stop levels, making it faster and more efficient to manage your orders. Similarly to the stop levels, you can also apply this feature to the target levels. If you don't want your target orders to be spread across 3 levels and prefer to have all your target orders consolidated at level 1, simply click on Box 1. When you click on Box 1, all your target orders will be merged at level 1. Similarly, when you click on Box 2, all target orders will be anchored to level 2, and when you click on Box 3, all target orders will be set to ATR level 3. When you want to split the stop target orders and no longer have them merged into the same level, simply click on boxes 1, 2, or 3 again. By clicking these boxes again, the stop target orders will be separated and no longer anchored to the predefined ATR levels, allowing you to adjust the stop target levels independently and freely. Next, another feature that we are very proud of as one of the pioneering vendors to implement it is the ability to move the stop without attaching it to each individual order. This feature allows you to move your stop orders automatically and simultaneously without needing to manually adjust each individual order. Here's a quick example to make it easier to understand. When you place a buy order, the tool will calculate and update the latest ATR values and plot the lines on the chart. At this point, your stop will be continuously moved according to these ATR plots without the need for manual adjustments. This feature allows you to easily adjust your stop based on the actual market movement without the need to modify each order individually. From one order, you can automatically apply the adjustments to all orders, making it both effective and time-saving. Even more special, if you have up to 3 stop levels that you want to move, the tool can handle all of these adjustments simultaneously without requiring any additional manual steps. This feature frees up your time, allowing you to focus on more critical trading decisions. Moreover, the tool helps you know when to move your stop and where to move it safely, minimizing risk and optimizing your trading strategy. Through a real trading video in actual market conditions, we want to demonstrate the effectiveness of this tool. In the video, you will see that the stop orders are continuously adjusted without any manual intervention. What's special is that the stop levels are adjusted scientifically with no subjective judgments or estimations. Each time the tool moves the stop, it is based on the pre-configured ATR levels, ensuring precise and optimal adjustments. In some cases, the tool also helps protect you from being stopped out too early during periods of high market volatility, ensuring that your trading decisions are executed accurately and effectively. Let's take a moment to relax and take a look at the trading results. We'll watch how the ATR-TradeShield tool performs effectively in real market conditions. Next, another standout feature we want to highlight is the use of ninjaTR, a tool we've developed. We allow users to choose between ATR and ninzaTR for calculating stop and target levels. Through the following two examples, you'll clearly see the differences between ATR and ninzaTR, which will help you understand how this tool provides benefits in adjusting your trades according to market conditions. You can see that ATR reacts more quickly to price changes, adjusting stop and target levels right away when there are rapid shifts in the market. However, if the market is trending steadily with stable volatility, ATR has the advantage because it tracks the price movement more closely. On the other hand, when average price volatility is high, ninzaATR has the advantage. This tool adjusts the stop levels more steadily, with less impact from short-term fluctuations. Therefore, ninzaATR helps you manage risk more effectively in volatile markets, minimizing unnecessary fluctuations. Next, let's move on to the parameters of the tool. This part is very straightforward and simple. First, let's talk about the period setting. This defines the cycle for the tool to calculate the placement of stop and target levels, particularly for calculating the movement of the stop. For example, if you set the period to 5, The process of moving the stop according to the ATR levels will be more responsive and closer to the price, allowing the tool to react faster to market fluctuations. On the other hand, if you set the period to 100, the tool will be less responsive and less sensitive to price changes, as the longer cycle reduces the adjustment speed of the stop levels. The ATR levels, such as 2 ATR, 3 ATR that I mentioned earlier. Now let's move on to the next section, stop target movement. This part is very straightforward. You will define your stop target levels based on the appropriate ATR levels for your trading strategy. By default, stop 1 will always be anchored to ATR stop level 1. Stop 2 will be anchored to ATR stop level 2. Stop 3 will be anchored to ATR stop level 3. Similarly to the stop levels, by default, target 1 will always be anchored to ATR target level 1. Target 2 will be anchored to ATR target level 2. Target 3 will be anchored to ATR target level 3. You have the freedom to adjust your stop target orders to any ATR level you desire, based on your trading strategy and preferences. This offers you maximum flexibility in risk management and profit taking. For example, you can choose to anchor the stop order to ATR level 1 and anchor the target order to ATR level 3, or any combination of ATR levels that you feel is most suitable for the market and your trading strategy. Next, we will simulate the key scenarios you commonly encounter when using ATR-TradeShield. In the first example, let's say you are a trader who prefers to trade based on trend signals. In this case, you can simply set up the stop order without the need to set a target. If the market enters a strong uptrend, your stop order will be continuously moved according to the ATR levels, allowing you to stay in the trade without worrying about when to exit the trade or exiting too early. This allows you to fully capitalize on the trend without the concern of prematurely exiting the market. Thus, with just 2 orders, if the market enters a strong trend, thanks to this tool, you can fully capitalize on the opportunity and stay in the trend until the end, without worrying about adjusting the stop or exiting the trade prematurely. The tool will automatically adjust the stop level based on the ATR levels, allowing you to maintain the trade and optimize profits as long as the trend continues. Next, when you trade, it's common to encounter situations where the price does not hit the stop and then reverses direction, causing confusion and mental stress for traders, as they're unsure when is the right time to exit the trade. However, as you can see in the simulated trades shown here, we place many trades, but the price rarely hits the target. Nevertheless, the tool always keeps your stop at a safe level, and even moves the stop in your favor as the market progresses. As a result, some trades can still be profitable, even if the trade does not reach the target. Next, when the market is in a sideways range, meaning the price movement remains within a defined range, the tool helps you manage your trades effectively. By setting short ATR thresholds, the stop target levels will be placed at the most appropriate positions for the current market conditions. This allows you to close old orders, place new trades, and take profits at the right time, reaching your target efficiently before the price reverses direction. With this approach, you can avoid having your orders stopped out during periods of sideways movement. We've now fully introduced the ATR-TradeShield tool along with several real-world use cases. Before we move on to the next section, the super high reward strategy, we'd like to take just a moment to share a few special offers available only during today's workshops. ATR-TradeShield, $336, original price $600. An automated and fast trade management tool to help you handle risk more effectively. ATR-TradeShield Plus Dynamic Oscillator, $436, original price $950. A combination of automated trade management and momentum reversal detection, great for traders who want both control and precision. ATR-TradeShield plus Super JumpBoo plus Captain Optimus Strong, $946, original price $950. A complete setup for building a high-reward auto-entry trading system with smart risk and trade management built in. And don't forget, there's a free indicator gift waiting for those who stay until the end of the session. We hope to see you there, and thank you for being with us today. Next, let's move on to the second part, the super high reward strategy. The key components of the super high reward strategy include King Renko candles, Super Jump Boost, Indicator ATR-TradeShield, super fast, one-click entry tool. This strategy will provide you with the following benefits: early entry, no signal needed, high reward potential, clear stop and target setup, fast and confident execution. The first component of this strategy is the King Renko candles. Some of you may already be familiar with King Renko, and its traditional interface looks like this. However, this time the approach will be slightly different. Instead of setting the brick size larger than the trend threshold, I will set the brick size smaller than the trend threshold, but specifically half of it. At this point, the King Renko interface will be changed and will look like this. The special feature also comes from here. At this point, the candle with the largest body remains the one with the highest high. However, the difference is that the candles following the candle with the largest body always have prices moving toward the main trading axis, which is called the central price axis. As the price moves, it always closes and heads toward this price axis, forming a trading zone. For an upward candle with the largest body, the central price axis is the closing price of that candle with the largest body. Conversely, when a red candle is formed, it is still the candle with the largest body. The central price axis in this case is the closing price of that candle. As the price moves, the central price axis will serve as the point to which the following candles will move. The candles after the red candle will have prices moving toward the central price axis, meaning the price will move to close near the closing price of that red candle. You can clearly see here that the price always moves toward the central price axis, whether it's a green candle or a red candle. Both types of candles tend to move toward the closing price of the candle with the largest body, establishing a connection with the central price axis. Next, we'll discuss the Super Jump Boost indicator, a tool that helps confirm trading zones. But the key feature is that we don't need to trade based on its signals. Instead of waiting for the signal, we will enter the trade earlier than the signal provided by the indicator. For example, when the price forms a supply zone, we will execute a sell order without waiting for the indicator's signal. Similarly, when the indicator shows a demand zone, we will execute a buy order without waiting for the buy signal. This approach allows us to take advantage of opportunities earlier and manage trades proactively. Next, ATR-TradeShield will suggest stop, target placement, and help with effective stop movement. This tool automatically adjusts the stop and target levels based on the ATR levels, helping you manage risk and optimize profits throughout your trades. Next is Super Fast One Click, a tool that allows you to enter trades with just one click. Specifically, when you hold control and drag the mouse over the chart, you will execute a buy order. When you hold control and drag the mouse below the current price, you will execute a buy limit order. When you hold control and drag the mouse above the current price, a buy stop order will be executed. Conversely, for a sell order, you simply need to hold the alternate key and drag the mouse to the desired position on the chart to execute a sell order. Specifically, when you hold the alternate key and drag the mouse over the chart, you will execute a sell order. When you hold the alternate key and drag the mouse above the current price, a sell stop order will be executed. When you hold the alternate key and drag the mouse below the current price, you will execute a sell limit order. Next, we come to the most important part, the strategy checklist. This is the method that creates the super high reward strategy and helps you enter trades early. Take a close look at the following scenario. You can see that we now have a candle with the largest body formed. The position where we will execute the trade is at the price axis, but the question is, which price axis should we use to enter the trade? The price axis is the price axis within the demand zone created by Super JumpBoo. When the price axis appears in this trading zone, this is the point at which we will enter the trade. When the price axis is within the trading zone of Super JumpBoo, it will help you increase the chances of entering trades with a high win rate, as the demand zone is clearly defined and likely to show strong price movements. Here, when the demand zone is formed, we will only enter a buy order. At this point, using super fast one-click, we will execute a buy order at the exact price axis identified within the demand zone created by Super JumpBoo, without waiting for the signal from Super JumpBoo to appear. At this point, after the order is executed, ATR-TradeShield will take over the task of managing the trade for you, helping you move the stop and manage risk effectively throughout the trade. However, the key point here is that you can clearly see that the Super JumpBoo signal appears after the candle with the largest body is formed. By entering the trade earlier, we have a better position, and the profit gained comes from entering early and capturing the candle with the largest body. At this point, after the order is executed, ATR-TradeShield will take over the task of managing the trade for you, helping you move the stop and manage risk effectively throughout the trade. However, the key point here is that you can clearly see that the Super JumpBoo signal appears after the reversal candle has formed. By entering the trade earlier, we have a better position, and the profit gained comes from entering early and capturing the reversal candle. Next, you can see here a scenario where a buy trading zone appears, but there is no price axis within that trading zone. This is a situation where we should limit trading because the absence of a price axis in the trading zone may indicate that the market lacks strong signals for a safe entry. Then, you can see that a new price axis is formed right within the trading zone of Super JumpBoo. At this point, we can enter a buy order here as it is valid and meets all the required conditions for trade confirmation. Next, for a sell order, we need to focus on the following scenario. Although Super JumpBoo has created a trading zone and the price has formed a trading axis, the price axis is not within the trading zone, so we should not enter a sell order. Then, you can see a new price axis forming within the supply zone, and at this point, the conditions are met for us to enter a sell order. When the price axis appears within the supply zone, we can execute a sell order directly at this new price axis. After the price hits the order, we can see a sell signal appear. And we have already entered a sell order earlier, giving us a significant advantage. By entering the trade earlier than the signal, we were able to capitalize on the opportunity and have a much better position. Furthermore, by combining Super JumpBoo and Super Fast One-Click, we achieved an efficient trade and a much better position compared to waiting for the signal. This is the advantage of being proactive in entering trades, helping to optimize opportunities and minimize risks. Next, here, a price axis is formed within the trading zone, and this meets the conditions to enter the trade. When the price axis appears within the trading zone, this is the right moment for us to enter the trade. After entering the trade, the ATR-TradeShield tool will handle the trade management for you, automatically adjusting the stop or target levels, helping you manage risk and optimize profits without needing manual intervention. You can clearly observe that we can enter the trade as soon as the trading zone and signal appear. giving us a significant advantage on price. By entering early, we don't miss the opportunity and capitalize on the trend right from the start. This is the biggest advantage of the super high reward strategy, as it allows us to not only enter the trade early, but also to achieve a very favorable risk-reward ratio, optimizing profits and minimizing risks during the trading process. A very useful stop target setting tip you can apply in trading is to set the target according to the trend threshold. The trend threshold is an indicator that shows the market's volatility within a certain time frame. For example, if the trend threshold is 10, you will set your targets at the following levels. Target 1 will be 10 ticks. Target 2 will be 20 ticks. Target 3 will be 30 ticks. By doing this, you can always maintain a clear and reasonable reward-risk ratio, such as reward risk 1.1 for target 1, reward risk 1.2 for target 2, reward risk 1.3 for target 3. When a long-bodied candle appears, this is a sign that the market is experiencing strong volatility, and the likelihood of hitting target 1 is high, while still maintaining a 1.1 reward-risk ratio. Note that when the trend threshold is high, you can set further targets, e.g. 20 ticks or 30 ticks. And when the trend threshold is low, you may want to set closer targets to minimize risk. In addition, another important factor in trade management is to close trades based on the candle color. Specifically, if you enter a sell order early and when the pink candle color downward candle is broken, meaning a bullish candle appears after a series of bearish candles, you should close the trade at that point. This allows you to maximize the downward momentum before the market potentially reverses, Similarly to the sell order, when entering a buy order, we also set the target in the same way as we just suggested. Alternatively, you can close a buy order when the green candle, bullish candle, ends. When the green candle ends, it could be a sign that the upward momentum is weakening and a reversal may be imminent. By closing the buy order at this point, you can maximize the upward momentum during the trade and avoid the risk when the market starts to reverse. Now that I've shared the full super high reward strategy, if you're looking for a complete toolkit that supports you throughout the entire trading process, from signal detection and precise entries to disciplined trade management, then we have something special prepared for you. Super Kangaroo Trading Package, $896, original price, $2,200. This bundle includes 4 powerful indicators, each designed to play a specific role in your trading workflow. King Renko, a completely new approach to bar type, offering unique market structure insights. Super JumpBoo helps you trade within super high reward zones with confidence. ATR-TradeShield automatically manages trades by placing stop losses based on real-time volatility, helping you stay disciplined and control risk effectively. Super fast one-click, a quick action trading tool that lets you enter and exit trades with speed and precision. Crucial in high-impact moments. The total value of this package is $3,200, but today only during this webinar, it's available for just $86. Plus, you can use the code SUPER to get an additional 15% off, whether you choose the full bundle or decide to purchase individual tools from the package. We're offering this bundle because we understand that some traders don't just need one indicator. They need a complete, reliable system to help them trade consistently and with greater confidence. Before we move on to that exciting gift we mentioned earlier, allow us just a few more minutes to share some special offers available exclusively to attendees of today's workshop. ATR-TradeShield, $336, original price $600. A tool that helps you manage trades automatically and efficiently, optimizing your risk control. ATR-TradeShield Plus Dynamic Oscillator, $436, original price $950. Combines automated trade management with momentum reversal detection. Ideal for traders using flexible strategies. ATR-TradeShield Plus Super JumpBoo Plus Captain Optimus Strong, $946, original price $950. A trio of tools designed to build a high-reward automated trading system with strong entry logic and effective trade handling. And now, let's jump right into that special gift we've been saving for you. And here is the free gift we're offering to those who stay with us until the end of today's webinar. The Trend Magic Pro Indicator. Trend Magic Pro is a trend-following indicator originally based on the classic CCI Commodity Channel Index, widely known in the MetaTrader world and now upgraded for NinjaTrader 8. It's simple to read, easy to apply, and works well across Forex, futures, and stocks, making it suitable for traders at all levels. Green trend magic with price closing above it. Signals a bullish trend. Consider looking for long entries. Red trend magic with price closing below it. Signals a bearish trend. Consider looking for short entries. You can also use it to trade pullbacks when price retraces back after breaking away from the trend magic line. Our Pro version includes major improvements. Smooth CCI NINZA ATR integration and a color change filter, all working together to significantly boost the performance compared to the original version. And that brings us to the end of today's webinar. We want to say a heartfelt thank you to each and every one of you who took the time to join us today. Whether you stayed for just a part or stayed all the way through, especially those of you still here now, we're truly grateful for your presence. We hope that what we shared today was not only informative, but also genuinely useful to your trading journey. Our goal has always been to make tools and ideas more accessible, and we hope you walk away with something practical and inspiring to apply. We'll stick around a bit longer to answer any questions you might have. If something comes to mind later, feel free to reach out anytime, drop us a message or send an email, and we'll get back to you as soon as possible. Thank you again for being with us. We look forward to crossing paths with you in future webinars or trading sessions. Until then, stay curious, stay focused, and as always, trade wisely. Take care, and see you next time.